Losses are an inevitable part of trading, but the real important aspect is how you actually deal with them. So that is exactly what we will be speaking about in this video, how to deal with your losses. So without further ado, let's get into it. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So if you want more free analysis and education, make sure you subscribe and I will see you in the video. Okay, so today what I want to speak about is exactly how you're supposed to be dealing with losses in trading, and I also want to give you a full breakdown of GBP AUD, so what kind of situation we currently have on the pair and how we're supposed to be approaching it to find a very good high probability trading opportunity on the pair. But first, let's speak about how you're actually supposed to be dealing with the losses that you have in your trading account. Now, there are two main ways in which you're supposed to be dealing with losses. Number one, you need to identify if the loss is actually a mistake or is just part of the normal losing part of the trades of your trading strategy. Let me explain better what I mean by this. No strategy, no matter how good it is, will have a 100% win rate, okay? And every strategy will have losses. Now, the important thing is that the losses, okay, combined with the winners, obviously give you a positive return. But to do this, there are two main ways. Either you have a very high risk to reward, or you have a very high win rate. The best thing is to have an average win rate and a good risk to reward. What do I mean? If you're able to have between 50% and 60% win rate with a minimum 1 to 3 risk to reward, you will be absolutely killing the market always in the long term. And if you have, for example, a 1-to-1 risk to reward, then you need to have a quite high win rate if you want to actually make a good returns in the market. On the other side, if you have a low win rate and low risk to reward, that is where you will be actually losing in the long term in the market. But what I wanted to say is that you need to identify if the loss is part of your normal losses. Let's speak about them in these terms. So the normal losses of your strategy, or if you made a mistake. Now, if you made a mistake, that's a big problem because it means that you don't know the rules of your own strategy. Because remember, your strategy needs to be rule based. And if you're making mistakes in following your rules, then you are messing up your statistical edge in the market. So two things: identify if the loss is a mistake. In that case, it's best to go back to demo trading because you are live trading something that you're not consistent with yet, not because the strategy is wrong, if you have tested it obviously, but not because the strategy is wrong, but because you are not applying it correctly. Therefore, you don't have a statistical edge in the market. On the other side, if you do have a statistical edge and that losing trade is part of the rules, so it has been executed correctly and it's just part of those normal losses, that is perfectly fine. Okay, there is absolutely nothing you should be worrying about because your job as a trader is just to continue to apply the exact same rules, and in the long term, by applying always the same rules, you will absolutely come out with a profit because it means that you have a clear rule-based strategy with an edge in the market, and you also know how to properly apply that edge. Now, let's speak about GBP AUD because it's a very interesting pair for a potential trading opportunity. Now, first of all, just a quick update on the previous analysis. Now, if you remember, we spoke about this pair 2 times, okay? Both on YouTube, if I remember correctly, but I will link both those previous analysis here in the description, no matter if it was on TradingView or on YouTube. First of all, we spoke about the pair after the market had created this overextended W formation, and what we wanted to see is the market make a move to the downside and break back below the structure. And in fact, that is exactly what the market did. So followed perfectly what we wanted the market to do. And not only the market retraced exactly to the previous resistance, now turn support at this level, but it also broke it to the downside, therefore creating a new structure at this level. And in fact, when the market was here, I made an update on the pair here on YouTube telling to all of you, expect the market to make a retracement and then continuation to the downside, and that is exactly what the market has now done. Now obviously there are a lot of reasons for which I wanted to see this move to the downside, and to see the complete list of those reasons, obviously go and check out the previous analysis, which you find linked in description, so you will have obviously more free education and understand exactly why we wanted to see this move to the downside that the market has currently done. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. So let's start our analysis from the monthly time frame. Now on the monthly, clearly we have a market that has created this very nice move to the downside, and it has approached a very important support area. Is approaching actually a very important support area which it hasn't tested yet, which is this level here from which the market started all this move to the upside, which is again support at this region, and we definitely expect the market to go and test this level. Another important thing that we can see from the monthly is that after a huge impulse to the downside, what do you expect? You expect a retracement. And that is how the market moves, okay? The market never moves with one straight line. You will always have retracements along the way. So you definitely expect a retracement to the upside, and there is no better zone from which starting a retracement than the actual previous low, which is the demand area from a monthly perspective. So pretty simply, just by looking at the monthly time frame, you know that you can expect a little bit more continuation to the downside and then a nice retracement. Now, a very important thing to know is that if you want information on a retracement, what you're supposed to be doing is taking your Fibonacci on the impulse. So from the high to the low of the impulse. And what you will see, what we do see, we see that the market clearly has a 0.382 Fibonacci retracement lining up perfectly with this supply area here. So we definitely expect the market to give us a retracement to that zone before the continuation to the downside, which also brings the possibility to create this head and shoulders before the continuation to the downside. But important thing that you need to have in mind before we go down on the weekly is to know that we can expect a short-term move to the downside and then possible continuation to the upside. Going down on the weekly time frame, what we have a market that clearly has rejected the previous weekly support, now turned resistance. In fact, during this move to the downside, the market respected this zone with this green candle, then broke it to the downside, so previous support turned resistance, and then the market rejected again the zone, and we expect continuation to the downside. Now going even lower on the daily time frame, what we see. Now on the daily, we have just spoken about the situation after the market broke below the neckline of the W formation and went for the retest for the creation of this head and shoulders pattern here. With the creation of this impulse correction and impulse to the downside, the market has broken new daily structure to the downside, which is this level here. So the previous daily support here, again support here, again support here, which is resistance now at this area. And we can expect more continuation to the downside for the last wave to the downside to test that monthly support that we have spoken about at the beginning of the analysis. If you remember from the monthly, we wanted to see short term to the downside and then the break above. So how we can be approaching this kind of situation with students: a bearish structure on the weekly and daily. On the monthly, a structure where we want to see the market make one last move to the downside before the continuation to the upside. How will we approach this situation? Now, before I show you that, let's go and give a quick check at what we have from a COT perspective, so commitment of traders, what the biggest banks and institutions are currently doing on the pound and on the AUD. Now, from a pound perspective, what we can see is that we went from 35k net positions all the way down to minus 36k net positions. So we went from having way more longs than shorts from an institutional perspective, with 76k longs and 40k shorts to a situation where we have way more shorts than longs, with 63k shorts and 26k longs. And now net positions are increasing from minus 36k to minus 13k, with more longs getting added. So the pound is getting quite strong. So why is GBP AUD moving to the downside? Because remember, in the short term we have seen institutions selling the pound. However, in the short term, what do we have? We have institutions buying the pound. So long term shorting, short term longing. Now, what does this mean? Okay, it means that if GBP AUD is actually moving to the downside with institutions buying the pound, it means that the AUD is getting bought even more because it's stronger than the pound itself. So going back to check what we have from an AUD perspective, if we check the orders of the biggest banks and institutions, what we can see is that we went from minus 54k net positions all the way up to plus 4k net positions. So from having way more shorts than longs to having way more longs than shorts from an institutional perspective. So a clear shift with a lot of longing on the AUD, with 803 longs added with the last report alone, and 4,000 shorts getting closed. So AUD very, very strong, stronger than GBP, and in fact GBP AUD has been moving to the downside because institutions have been longing the AUD more than the GBP. Now, how we can be approaching this situation? We know that we have structure here. We know that we expect more continuation to the downside. So if the market will create a little bit more of an impulse and give us a retracement to this very strong structure area, which was structure support here against structure support here against support here, and turn resistance at this level. If the market will actually go to retest this previous support, now turned resistance, then with students inside of this area, we will be monitoring price action on the 4-hour time frame, waiting for the market to provide to us one of our valid entries. And if and only if the market will provide to us one of our valid entries on the 4-hour time frame, then we will be taking a nice short with a very good risk to reward and good probabilities for the continuation to the downside and creation of a lower low. Because always remember, monthly, weekly, and daily are the best time frames for direction, but when it comes to entry, the best time frame is the 4 hours. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.